Welcome, everybody, to another episode of Sunday Sermon with your host, Chris, aka No Risk, No Premium. Guys, what is up? What is going on? I hope you had an amazing weekend, especially after that Friday we had. Good golly gee, when we were saying 428 after Thursday night and nobody believed us, the market said, hold my beer, let's go to 425. All right. So look, there's a reason why we knew where we could go to those levels, right? Because we had given massive levels prior. Even the week before, we were saying we could either go up to 450 or we could go to 428. Well, the market said we're going to do both. All right. So if you did the homework, then you were ready to strike. Okay. And you probably made a ton of money. I mean, I think Giorgino, when he was like, hey, the 428s, I started looking at the 428s. They were 20 cents. They were 20 cents. I don't know where they ended up, but I want to say they were worth over $2 at some point. And maybe Gino could hit the comments and say something on how much they were worth. And he even got in at 10 cents, 7 cents, something way cheaper. Right. So they went fucking nuts. 0.09 when he got in. Yeah. And then they went to what, Giorgino? Probably maybe over $3 at one point. I mean, they went stupid. But yeah. I think 3, I forgot. Yeah. No, they went insane. But it's because we did the homework. So, guys, that's why we are right back here doing it again. Okay. Every Sunday. Like I was telling y'all earlier, we're going to hit it just a very condensed one. This will be a macro one I want to talk about this week coming up, from a macro economic perspective, different earnings that we want to definitely keep in mind and track. Because basically we got all the blue chip earnings this week, right? You got, Amazon, Google, a couple other ones. I think Microsoft's this week as well, if not the following. And then also the following week we have, the Fed. We have the FOMC. I believe it's May 4th, if I'm not mistaken. So you're gonna have to let me double check that again. All right. But other than that, let's get started right now, guys. So hey, what do we have going on this week? As far as the economic events and who's speaking? Well, if we just go down, right? Nothing really jumps out at me here, to be honest with you. The only thing I like to see is what are the initial jobless claims, because the Fed talks about the job markets a lot, and then they're always going to be talking about inflation. All right, so there's no CPI this week. So all I'm thinking is what happens here. Okay, these two numbers, that's not till Thursday, and then me personally, I'm just interested in the new home sales. That's it. That's all I'm really looking in here. Also, the price index as well. That's on Tuesday. So all the new home stuff's on Tuesday. Will be interesting because we know the housing market is, some will say in a bubble, some will say gonna pop, some will say it's not in a bubble. I don't know. But here's the thing. Rates have gone up 100% since the pandemic lows. You were under 2.5%, which is an insane rate. And now they've jumped to over 5. So that's 100% increase. So if you have an ARM mortgage down there, and that should increase on you, just totally are going to be underwater. If you put 3% down, and there is some downside, you're going to be in trouble, right? You're going to be in trouble. So if you guys remember how 08 happened was, there was a lot of people highly leveraged, little cash, little assets, not a lot of money being made. And, when one bank fell, they all fell because they were all sitting there on a house of cards together, right? So I'm not saying that that's what's going to happen this time, but it's something to take into account 100%. Okay. So Tuesday, I want to see what the homes are doing. Okay. And then the jobless claims on Thursday. That's all I'm really looking at. Okay. As far as those two go. Now, what do we have this week? Well, Facebook 427. Okay. So what's this? 427 is Wednesday. Apple, I believe, is the 428. That is Thursday. Okay. Microsoft 426. That is Tuesday. Amazon is on Thursday. AMD is 5.3 the week after. Google is 426. So you guys see 1, 2, 3, 4. Guys, what are the 4 highest weighted stonkies on the Qs and on SPY? They're all reporting this week. So I don't give a fuck if you're playing the earnings or not, which if you guys were on the Zoom call prior to this one with Carter and Dan, I know they went over basically a straight earnings. It was almost like I know it's just literally an earnings call, because there's so much going on this week. So you better pay attention, right? Put these on your calendars. Be watching them, even if you're not playing. Why would you hold overnight calls if Amazon's reporting? If Amazon misses and they're down 200 points, what do you think the market's doing? calls are toast. Okay. Same thing with Apple and Microsoft. Definitely the ones you want to pay attention to. Me personally, this week, you guys have heard me talk about it. I personally will be in the Lottos chat, probably starting tomorrow, depending on the action. I definitely going to be watching these three. I'm going to be watching Microsoft. I'm going to be watching Amazon. I'm definitely going to be watching Alphabet. All right. So these two are the most, because the implied move on Amazon and Google are so high. These are something that, as far as taking a calculated risk gamble, in my opinion, I'm not going to tell y'all to do anything of that sort with me, but it might be worth buying a few contracts out the money, letting the IV pump on them, because they are such heavy stocks, and they are bigger contract, like cost stocks. You can probably get a nice 100%er if you buy at the right time. And if you're in that Lotto chat, Dan pretty much, he about lays it out as simple as you can. But that it might be worth, if Amazon is going to miss, because Rivian was the last time that they, on the last earnings, the only reason why they ripped up before, because the Rivian IPO, and they had massive, and the stock was at what? It was at a high amount on their books. And now the stock is where? Not anywhere close. It's like 1/3 of what it was. Okay. So for the price for earnings, I think everybody thinks that Amazon's going to miss, and I think they're right for it. Okay. So with that being said, I would want to maybe hold one Amazon contract overnight. Why not? A lot of people did it on Netflix. You guys made a ton of money. So that, and you guys know I don't play earnings. You know that. I do not play earnings. I will play the IV pump. I will always sell before. You guys realize the last time I played earnings, I have 5 contracts of the Netflix options at $8. They went to 13. I sold them all. They ended up going to 150. All right. So that's $4,000 to what? You don't know. That's $4,000 to 50 grand. All right. And I didn't play. All right, cool. So this time I see the same opportunity with the Amazon. All right. I see the opportunity with Amazon. So I'm going to roll with it. That's the one I'm going to be watching. So we know that this is on Thursday, right? 4/28 is Thursday, but I really like the Google one as well, because it's the same type of contract, same type of stock, right? Can move 100 points in 30 minutes. All right. So with that being said, we're going to watch those 3. I know that they're going to be watching some other ones as well. And if you guys hadn't, we are uploading their Zoom call that they had about an hour before this. So we'll definitely get into that. Now, on to the meat and potatoes, which you guys are like, Chris, shut the fuck up about earnings. Nobody cares. Get right to this fucking charts. Here we are. Now we're here. So what happened? We'll start with this. Why did we know puts when we did not get through 450? Okay. Why did we know puts when we could not get through 450? It was pretty clear as day. Okay. First off, we had what? On TOS, we had the 200-day moving average at 448. Okay. 448. At the same time, this 20 MA is the green dotted line. We knew that was right there it was, at the time, it was stacked right on top. It was actually a little bit above, right above the 200-day moving average. And then on Trail's number, he had what? 451, or maybe it was 450. He had his 20 MA on the weekly, I believe, the weekly chart up here as well. Okay. So that was a huge level. And even guys, even if you were not using the MAs, okay, even if you were not using the MAs, literally, that was your cheat code right there. That was your cheat code. Why? We could not get through this level. 1 fail, 2 fail, 3 fail. You guys see that? This, even if you're not using MAs, you could see it. Clear as day right there. It could not get through. And then on top of that, we had massive MAs right here. Okay. We knew once it got above, it poked its head above and said, and if you're using TOS, this is the 100-day moving average, the orange line. I know it's not one that we talk about often, but is one that I do use. Okay. Look where it ended up failing. Right on top of it. Okay. So you would have known right then and there, hey, shit, we didn't get to that. Last time we had trouble getting through. So if we didn't break through it and base and keep on running, we literally puffed our head above it like Groundhog's Day and came right back down. So we knew right then and there, it was puts time. Okay. We knew it was puts time. Then we said, okay, if we do not because you could see how we had major resistance here, right? 443, 444, this area, right? This was the next area. all this resistance. We couldn't get through. We finally got through, and then we actually back tested it here, right? So if you just drew a line, like literally, you see this line I have right here, right at 444, even 445. Okay, if you knew we could not get through there, and then we back test it and rip higher, right? You go, okay, now that's support. So we kept on saying, yo, if 445 breaks, we are definitely going down to where? We had the 50 MA at the time was right here at 440, 441. Okay. And at the time as well, we also had what? This is the blue line. The blue line dotted was the 5 MA. It was at 441. Remember that day we got on live? I was like, man, we're going to bounce somewhere. I don't know where it's going to be, but right at 5 MA is way down there. So you could have taken puts, and if your goal, because we know that magnet of a 5 MA, it's going to want to get down there. Okay. And it did. And then it kept going right to support. You guys see this was massive support. It went closed right there. So the next morning, right when we opened up and we did not rally back above that support, meaning we actually failed it, right? We actually failed it lower. Okay. We actually failed it lower. And the trade was easy here. We said what? We said, oh shit, sorry. If we do not get back above 440, pretty much, okay, we are going to go lower if we go through the overnight lows. Okay. Well, you can see here. I mean, we'll even go to like the 5-minute chart, because I know a lot of you guys like the 5-minute chart. Cool. Zoom back here. Let me just go like this. 1 second. Cool. Is that better to see? There you go. So we saw, the low, we're like if 436 breaks, we're going lower. Boom. What happened? It broke. Then what happened on this back test? It went and back tested the support, didn't get through. We cratered again. Remember that bear flag up that everybody was talking about? Let me get a little closer now for you guys. This is a textbook bear flag. I mean, textbook. Okay. Remember Troll's like, Chris, is it looking like that bear flag again? I said, yep. No, exactly. And I was like, I'm looking at calls. I said, if we can get back above 436. Remember, he goes, I don't know if you look, guys. I said, yeah, I'm not taking anything. I'm just watching. Okay. And when that red candle started coming down and down, and when I knew we weren't going to get through because I saw how this wick to the top was, Charles said, I'm getting in puts at MB2. Then we rode puts all the way down. And then what happened? Bounced around in here. And then we broke what? Pretty much broke that 432, which was our next level. We went down and back tested the 432. You guys see that? Then we took puts again. And then we got through the what? Remember this level I had in here was 430.29. I said it was a 61.8 level. Okay. 430.29. Well, we went down there and then we went right through it. Then we back tested it. You guys understand? Support, breakthrough, back test, back down. And then it was a crater gator. I mean, it was a 9 billion to the sell side or some stupid shit like that for the MOC. So we went straight down. Okay. And we knew if 428 broke, we said if 428 breaks, we're going to 425. Okay. Now, mind you, a lot of this was all called on live. So I know a lot of you were able to capitalize on it. But even if you weren't on live and you would have had the homework filled out, right, from our Sunday sermon that day and all of us talking throughout the week, you would have knew if we really got selly that we would have gone all the way down to 426 pretty much. And even after 426, I mean, we broke again because it was a huge MOC to the sell side way down there. Now, with that being said, what are we expecting this coming week? Well, it's a great question. Okay. That's a great question. Sorry, this is. Okay, obviously, this is what we have to talk about because I know everybody in the mother sees it. But what actual pattern is finally starting to play out here? Right? Head, shoulder, head. All right. So if we have shoulder, head, shoulder. Okay, if you remember on the last sermon, everyone's like, oh, look at this inverse head and shoulders formation. I said, just because everyone's talking about this inverse head and shoulders, I guarantee it doesn't work. They faked this out. They said, oh, we're going to catch it. I said, they're going to push us all off sides and they're going to drop this motherfucker. Right. I think Gino said it in the middle of the week. He said, Chris, remember you said this on the sermon? I said, yeah, bro. They did exactly that. Massive candle down, right? Massive candle down. So for me, where am I looking? Well, if you guys remember this 420 level, 420, 421 level, now there's no MAs down here, right? Like we all understand that. There's no MAs down here. But what is there? There is support levels. You guys see this long wick down and the two bodies of these candles and this wick down, none of them, anybody was closed under 420, 420, 421. Okay. And it just so happens this 78.6 level. What is that? Oh, let me get closer to it. Yeah, 78.6 level is right here at that 421. right? How convenient. So to the downside, I'm definitely looking at 421 to the downside. And then the 421 breaks, where am I looking next? I would look at where these two candles wicks are, which is about 415, 414, 415, then 420. I'm sorry, then 410. 410. And then you guys remember this infamous gap right here. Okay. See if we'll find it. There's a gap right here. Everybody and their fucking mother sees it on FinTwit. You guys see that gap? That's the gap I'm looking for. Okay. It might not be this week and it might not be next. But remember, the Fed is talking on May 4th or 5th. I will need to double check that for you guys. But I believe that's the next FOMC meeting. Obviously, everyone's waiting to see what is going to happen with the Fed. You know, what type of rate raise are they going to do? Are they just rolling off the balance sheet, et cetera, et cetera? Well, guys, if you remember the last time we sold off into the Fed. Okay. Oh, I'm sorry, guys. If we sold off into the Fed, okay, was right here. Sold off into the Fed. Everybody and their fucking mother got short as fuck right here. And what happened? 415 to 445. We went 30 points in a week. It caught everybody. It caught everybody off sides. Okay. And that motherfucker ripped up. Okay. And then everybody's bias was, no, this can't be happening. So I'm going to keep trying to short the pops. Well, a lot of people got fucking screwed. You know, pretty much after the first 10 points, I knew that shorting the pops was not it. Because it caught me. I remember going short at about 430, 428, 430, and that didn't work. When we got past 440, I went, okay, this shit's going to 460. Okay. Trell was the one that was screaming 460, 470 down at 415. All right. Everyone's like, Trell, you're fucking crazy, bro. All right. So what is going to happen this week? Well, we don't fucking know. But what I could tell you is this. We've seen how much of a magnet these MAs work as. You know what I'm saying? When we get really far, super far overextended away from our MAs, what happens? We always slingshot right back into them. Now, I'm not saying we're going to slingshot in tomorrow morning. I'm not saying that at all. But what I'm saying is you have to be cognizant of that. Okay. The risk to reward here right now is going long. Believe it or not, is going long at support now because we know we've got to get back to those MAs. So what levels are we going to look to for the upside, guys? Right? Well, we can see right here. Okay, we'll just zoom this in. This is the daily chart. Okay, we have the 5 MA. Okay. The yellow is the 8 EMA. I know a lot of you guys like the 8 EMA. Okay. We have the 50 MA. Okay, the yellow, green dotted, or I'm sorry, not green, excuse me, purple dotted. Everybody sees that, right? You guys could all see what I'm talking about when I say dotted and solid, right? Everyone, you can type yes if you want, just so I know. But you guys see 1, 2, 3, all in just this little area from where? 438 to 440. 438 to 440. Now, mind you, I mean, we still got to get back through 428. Still have to get through 4,300. But if the MAs are going to tell us anything from a macro perspective, if you're looking for a longer swing where we can get to, okay, you guys can see where all these MAs are. And we know the 5 MA, it loves it. That's at 438.36. Probably open up tomorrow around 437 in the morning. Okay. As well as these other MAs will have moved down too. But we got 440. Then I'd say about 442, which is where the 21 EMA is. Okay. And then other than that, 445. I think 445 is probably where the 20 MA will be at if we were to get really, a lot of buyers. And pretty much what would happen is they'd be short squeezing the fuck out of everybody back up. That literally, guys, this is exactly what it was. This was exit liquidity. This was massive shorting of the whole here. Okay. Remember how everyone was like, look at the 400 puts, look at the 380 puts, look at the 360 puts. Well, you guys were loading. They went, fuck that. We're just going to take it the opposite way then. So we also had some gamma. We had some, short squeezes all the way back up. But then now what is the trend again? The trend was what? Buy support, rip, buy support, rip, buy support, rip, right? Buy support, rip, buy support, rip. Okay. Then it became fade the pop, fade the pop, fade the pop. Okay, we got back up now. Major level, fade it. Okay. So that's what we're looking at for this week, guys. I am looking at downside of 421, 415-ish, 416. Maybe you can look at the bodies of the wicks, which probably would be better. I look at 416, then 410. Under 410 is 100% going to 403. And if you guys think it's going to fill the gap on the first touch, you're out of your mind. There will be a pop back to probably 415 if it tries to get down there. Okay. So ultimate goal is what? I would think my ultimate goal would definitely be 400. I really like 396 because, guys, this Fibonacci level, the 127.2 level, it's a very important level for when you're trying to figure out where it could go when it would be in what's called price discovery. If it hasn't traded in that channel a while, it'll be new buyers and sellers. Who knows? A lot of times they use it for all-time high breakouts. Okay. But in this case, I wouldn't mind if we did get under 400 to get the 396. I think absolute bottom would probably be down here at 378. Okay, 378, that would be absolute bottom. I don't think we get there this week or even next week. To be honest, I think they might sell this thing off on a bunch of missed earnings into the Fed. And on the Fed, if we're underneath 4,000 on SPX, I think that'd be a great opportunity to go long. Because, guys, why? They are pricing this stuff in. Meaning they're setting the expectation. They're talking about what can happen. They're not catching anybody offsides by saying we're going to raise it 50 basis points and we might start rolling off the balance sheet. Okay. Don't short the hole. The trend is fade the pops and fade the pops. If the trend is buy support, then buy support. And trend can change intraday, day by day, week by week. So you have to do the homework all the time. You have to see what is going on. Okay. Because imagine if you would have bought this, like, you would have bought this support, right? Like support, and then you rip up, you're like, oh, buy calls the next day, and then right back down, right? So you have to know things are going to change in a blink of an eye. All right. Well, with that being said, guys, I'll do the levels one more time here, right? We've got 421, 416, 409, 410, 410. Way underneath is 403, then 400, then 396. Okay. Up above, I would think we would need to get to 432, 436, then 438 to 440. That'll be hell and a half to get there. There will be a ton of choppy action up there. I guarantee it. Just because there is so much going on right there. You can guys see how it was major support. We held that level 436 to 440. We held really well. Now, do we get underneath it and go up and test it again? I think it's only right. And at that point, the 5MA is probably going to be right there or just below it. Okay, so that would make the most sense to me. And now, just from a straight TA standpoint, guys, if you do have this head and shoulders, right? You guys see it, massive head and shoulders. How you measure the length of what how the setup will play out is you take the shoulder and you take the neckline, okay, which is about 420. And then you run up here. I'm sorry, the neckline would technically be about 420, 425. We'll call it 420. All the way up here is 460. That's 40 points. So underneath 425, 485, right? So I would say just under sub 400. Okay, just under sub 400. That's the measurement of the move that would come off. But remember, guys, when things are super obvious and everyone sees them and everyone's talking about them, what usually happens? The opposite. Guys, the market makers are not your friend. They're always going to do what you fucking don't want them to do. So don't short the hole. Okay, what were the bottom numbers again? You got it. Hold on one second. iPhone. 421. 416. 410. 403. 400. 396. Upside 432, 436, 438, 440. Okay. Now, does anyone have any questions now? Sitting Bull says, Chris has been full port, says 4580. Not full port, but guys, I mean, look I put that tweet out when we were at 440. Actually, I think we're at 448. I knew we were going to get back up there. I knew that was major supply. I could see how they were ripping us higher. Okay. And what happened off that level? If you would have gone short up here, okay, I said 450 ADS, so it's called 45 ADS. We'll call it 458. You could see right when we got through it, we came right underneath it. Then we tried to hit it again twice. We couldn't get through it. So you saw this whole area. If you would have gone short, that's what 458 to 426. That's 30 points. It's 300 SPX points. Okay. So with that being said, guys, any questions? This will be the time to ask the questions. Tonight will not be a live call with Trell and I. It will be a recorded call. Okay. And we'll want to keep it as a point of reference for you guys to constantly be able to go back to, so you understand how we do the homework. We do this every day. This isn't just a Sunday thing, guys. We record it on Sundays with y'all, but every day I get back on at night before I go to bed and I start looking at the levels again. Then I do it again in the morning. Right? Anyone have any questions about how we knew the action from Friday? The intraday action. Crickets. Anyone have any questions in general? Matt says, how you feeling about REITs, earn AGNC, loving those monthly dividends? I love REIT stocks. I think they're a very great, safe dividend investment, especially if they give the dividends. But guys, the REITs are typically filled with like shopping malls, commercial like they're not usually on the, at least the REITs I've looked at, they're not typically on like the residential side. Guys, the REITs are real estate investment trust. Okay. And what that is usually it's how you can invest in real estate without actually owning the real estate. You own the REIT, so they pay a dividend to their investors. Okay. It's typically higher. And you guys know that real estate's pretty safe. I mean, year over year. That's why all the rich people, all the wealthy people are always in real estate. So I like them. As far as personally, Matt, what I'd be looking at, I'd have to do some more research before I would be comfortable making a comment on it. It's not what I'm trading right now. It's not what I'm focused on right now. But it is a good question. I encourage you to ask that in the chat, because I know there are a lot of people that are in the REIT side and that do have dividends on them as well. Talk to us about the yield curve. Yeah. So you guys know I like to watch TNX, right? TNX is a 10-year yield, guys. If you've noticed, the only reason, why we are not okay. So everyone's like, I don't get, well, when rates are up, is that good or bad? Okay. Well, when rates are up, basically what's going to be going on is the reason why, if rates are up, it could slow down the economy. Why do we need to slow down the economy right now? Because inflation is out of control. Right. Okay. Like inflation is out of control. So what does that mean? It means that the amount of dollars in circulations is way too high. So the purchasing power of us, the consumer, is much less. What does that mean? It takes more of the same dollars to buy the same good. Groceries, cars. That's why, real estate, all these things are way more expensive. Okay. So if you're only making 100,000 a year, but the inflation is 8% and you don't get a raise year over year, it's going to cost more of the same amount of money that you make to live the exact same way if you're buying the exact same goods. So what does that mean when the yield curve is rising? Well, that means that the rate at which money could be borrowed is going to be much more expensive. What does that counteractively do to the market, to consumers? Well, first off, it starts with the banks. Okay. You guys know what US dollars, that's how consumer and producers operate. We exchange US dollars for goods and services, right? What banks use are called reserves. Okay. They're called reserves. It's like bank money. Okay. What they do is they also lend out US dollars to the citizens. Okay. But what they do is they actually lend out reserves to each other. It's an additional way they make money on the back end. The banks are required to keep 10% of all deposits in reserve. So if a bank, let's keep the numbers really simple here. If a bank only has $1 million in reserve, so like that means that we've got X amount of people that have deposited all their money in savings in these bank, and it equates to $1 million. I'm keeping the guys really simple numbers here. Obviously, that's not the case. It'd be billions and trillions, but that means legally they have to keep 10% of the million in reserves. In reserves, it's bank money in reserves. Okay. So that's $100,000. The other 900,000, they can lend out 10 times. That's why everyone says banks are the biggest fucking scam. They're basically make you give them their money, then they use your money to make more money, to make interest on that money at a way higher rate than they incentivize you to come and deposit your money. Okay. So if the rate at which the banks borrow money with each other is up massively, it's not going to incentivize them to have more or less reserves on their balance sheet, correct? To do more, right? To leverage their reserves. So if they don't do that, inadvertently, they then take the higher rate that they have to pay and they're going to pawn it off to the consumer. It only makes sense, right? So if you know that, then if the rate at which what we can borrow money, the consumer informs a debt like a mortgage, credit cards, small business loan, personal loan, etc., all those things, if that becomes more expensive for us to do, our first thought is, okay, if rates are up, it doesn't incentivize me to want to buy more things now because it's expensive, right? So when you stop having consumer spending, okay, what it does is it actually causes deflation to the market and it will actually want to bring inflation down. That's why everybody keeps talking about how we need to raise rates. Okay. Because if the banks are no longer lending more money out, guys, when they lend money out in any form of any loan, it is brand new money injected into the money supply. Okay. It's not like they had this money sitting in their reserve, because if you look on their balance sheet, when they do a transaction of debt, okay, it's not like their cash account goes minus $1 million for $1 million loan they put out. All that happens is they literally get to their AR account $1 million added. That's it. They don't lose anything. It is numbers on a keyboard, on a computer screen to them. Okay. So if what raising rates does is it makes banks not want to lend money to each other, and therefore if it's more expensive, if money is more expensive to purchase, because then that's what you're doing, you're purchasing money, then they're not incentivized to do it. And if they're not incentivized to do it, they're going to pass that expense off to the consumers, and the consumers are not going to want to do it either. Hopefully slowing down the economy. Okay. Hopefully slowing down the economy. So when rates are going up from a macro perspective, you do not want to be super long in the market because they're trying to slow the market down. That's why you've noticed a lot of these names, especially big tech names. Okay. So how would that affect businesses? Well, you guys have to realize businesses do not operate like from a cash basis. They're an accrual basis. So they take out numerous millions of dollars of loans. I'm talking about the big blue chips to operate and work day to day. Okay. Meaning if they need to make payroll, if they need to fund a new project, if they need to make payments, right? Because they know that they're collecting cash from their customers. Sometimes it's in form of payments. It's not immediate, but they're allowed to show the bank what their AR account is, and they'll send them a line of credit or LOC. If you guys are in that game, a line of credit is basically a revolving line of credit it's like a credit card for them. And it's usually like millions and millions of dollars, but it's set at an interest rate. And if that interest rate is more for them to borrow, they're not going to want to fund new projects. They're not going to want to pay more. Okay. And if it's more expensive for them to pay for these things, for this money, for the debt, they're not going to want to do it. Okay. And if the economy then slows down and turn from that, which is the goal, what happens to these businesses? Well, their margins get slimmer. And if they're publicly traded companies, all they care about is making the fucking money and how to make their investors happy. So investors aren't going to want to see they're slowing down. That's why we talk about guidance on earnings. Are they guiding up? Are they guiding down? Are there bottleneck issues? Are there supply chain issues, right? Do they have, they call them headwinds. Is there going to be turbulence in the future? Okay. So then what happens if people actually stop spending more money with them? Well, they have to figure out where they can make their bottom line work. So what do they cut first? Headcount. What is headcount? Employees. Okay. When you start trimming the fat, because dude, it's so expensive from a business standpoint. Any of my business owners in here, if you employ somebody, it is fucking expensive. You pay a payroll tax. You have to pay for all of their fucking medical. Okay. Then you have to pay to the state to have them. Okay. And it just gets very expensive. So what they do, they're going to trim that fat first. If they trim that fat first, well, how we have a gauge, what is the Fed doing right now to monitor our economy? They said the job market's super strong. Well, if they start firing people left and right, that means the job market's not that strong. Okay. So that's why from a macro perspective, we keep on saying, you'll hear BK and I talk about that TNX. It is going crazy. Look at it here. Okay. Look at it here. I mean, we could go back. Let's go to the week. Sorry. How do we go back to like 2020? Okay, perfect. This is 2020. This is the COVID crash right here. Okay. So 3.8. Okay. That's how this is. It's actually 0.03. It was 0.03% to loan out money. It was almost that for so long. See how long it was. Money was basically free. Okay, it was basically free, and now it's they see, okay, we are about to start getting this shit popping again. So they see that, so they know. Okay, they know. So if you guys think about this, then then if you're like, well, how would it affect like small caps or like like those smaller chip, those like Fubos and Neos and PLTR, all those COVID names that were super fun to play. Do you guys know why we had that massive bull run? Was because even stocks like those that don't have great margins, right? That have slim margins, they don't make a ton of money, but they're growing. They can now finance their business for almost nothing because money's so cheap. So if the rates start popping up, they get hit first. Okay, that's where all those look at all of them, all those stocks. I mean, like, look at that. 66 to 17. Neo. Everyone loved Neo. Right? I mean, we'll just go back. We'll look at shit. Sorry, guys. Fubo got to 62. It's $4 now. $45. $11. Okay. So the small caps are always going to lead you. So what's about to happen to the large cap stocks? What do you guys think? What if they already kind of started to do? I mean, let's look at Amazon. It's 1,000 points off its highs. Okay. But look where it was before COVID. It's barely at 1,600, but money got so fucking cheap. Everybody stayed at home and used Amazon. The shit went fucking nuts. And then it consolidated for how long? I mean, almost a year. I mean, this is just a channel. And now it finally looks like it wants to break down to the downside. Okay. Does it want to come back down to these levels? I've been telling the group my price target is 2,400 on it because we have some major resistance here. Does it get back and back test? Also, you got the 200-day moving average on the weekly there as well. But are these big time stocks going to follow? Okay. I mean, look here. This just looks like Apple wants to come. Don't mind this. This is disgusting. But it looks like, honestly, I bet back to 130 is possible for Apple. Microsoft. I mean, just look at Microsoft. This is COVID. So go look at where all these stocks were trading before money was fucking free, pretty much. Okay. That'll give you an idea of what could happen. I'm not going to say it's going to happen. I'm not saying they're going right back down. I'm saying what could happen if we're getting back to normal economic climate that we were at before COVID. Okay. And you have to think about this. We've never had these levels of inflation for 40 years. For longer than I was even looking at the market, we haven't had these levels. Okay. Something to think about too. Stocks do not only go up. The only reason why they go up is because money is flipping $0 and the Fed is buying bonds to keep liquidity in the market. Now they're no longer buying bonds. They're going to talk about selling the bonds. They're talking about raising rates. Those are all hawkish comments. There could be downside. Now, I'm not Mr. Doom and gloom, but I'm just saying from a macro perspective, I'm not looking to buy the dip long on a lot of big names. Okay, just being honest. I don't wish ill on anyone's retirement. Like my parents got retired. Like I feel bad for them. I feel bad for everyone's parents. I feel bad for our generation that is because we did this to ourselves. We decided to print $10 trillion. We decided to have Jerome Powell not raise rates when everyone was screaming for him to raise rates because they knew what this inflation was doing. In my opinion, we haven't even seen what is going to happen from the cause of all this. Okay. That's just my opinion there, of course. So let's see what happens. That's why this week is so important. We have 4 of the biggest names reporting, highest weighted on the 2 favorite ETFs that we love to trade, SPY and Qs. So we need to know what is going to happen. We need to know their economic outlook. Okay. It's very important. So guys, pay extra attention this week, please. All right. Well, okay. That was enough of like a 30-minute tangent I just went on, but hopefully that helped you guys understand why the yield curve, why raising rates, what that does. Okay, hopefully I explained that okay to you guys. Felipe says great insight. I'm legally blind and charting is my thing. Listening to this is great. Okay, Ivan, hey, welcome. We're glad to have you, brother. Hopefully, I'm glad you love listening to me scream at you. Then I'll just keep doing it. For ER, do you recommend hedging? Remember having BK straddle. For the ER, yeah. Yes and no. Me personally, you guys know I don't play earnings. Like meaning I don't hold through. It's too much of a gamble for me. I'm a avid blackjack player. I if I want to gamble, I'll go take my calculated risk playing blackjack. I'm probably not gonna do it in the market. I'd rather go put $5,000 on the table than go put it anywhere else for a bet, because you guys have seen what happened with earnings. You guys they could crush and you're down. Like I'm pretty sure Netflix beat the numbers, but they lost, their outlook was negative and they dropped 100, 150, whatever it was. Right. So yeah, I mean, for me, the one I told you, I don't know if you were on when I was saying MP. I'm really looking forward to Amazon. I'm really looking forward to Google, but more so Amazon. I think that's one that you could possibly hit one of those like Netflix plays, those people that are doing like 30 cents to like $40, where they're turning $100 into like, now I'm not telling y'all that that's what's going to happen, but Amazon would be the next ticker that would be able to yield that type of return. So for me personally, knowing that I missed the last Netflix earnings where I had $4,000 on the put side, that would have turned it into like, 50 to 100 grand. For me, I'm going, I think the calculated risk here for Amazon could be, it's going to see some downside. But it really just depends. I'll have to see how the action is going into, because guys, if you remember on the last earnings for Amazon, it was down like 150 points. And then they reported and they talked about the split and it was up 500 points. Right. So there's such a gamble, guys. And they didn't do great on earnings. And they also had the Rivian thing priced in on it as well, which was some very creative accounting, in my opinion. Look at Tesla, right? That's another great one. Look at Tesla. Tesla crushes earnings on some very interesting accounting, right? This is where they opened. I mean, they nosedived into earnings, then gapped up 100 points, and then ended pretty much 100 points lower. I mean, I think the high was almost 1,100. What was the high? 1092, and then they closed at 1,000, but they got underneath. So yeah, I guess 100-point drop. Okay, that's why earnings are so. They're like, guys, if you're thinking that like you're gonna go in this earnings chat and then Dan's gonna be like, yo, I'm gonna take some puts here and put like $100 on this shit, and you're gonna use your last $100 to go and put on and think it's gonna make you rich overnight. Absolutely not. That do not do that. Please do not do that. Okay. Please do not do that. Also, guys, yes, the IV crushed. So like people are loading like the $1,200 calls. Well, if those didn't go in the money on the move, those opened up way less, even though the move was up and you got it right. You guessed right, but the implied volatility crushed you. Okay. So that's why earnings are super, super, super risky. I'll tell you to stay away from them. Okay. Unless you play the IV pump on them, which is what Dan and Carter do very well. They buy when the IV is super low. Then IV, guys, if you guys don't know what IV is, it's implied volatility. Typically what it's saying is it's what is as the stock is trading, the contracts that is priced in what the volatility is. Usually when it's low, you want to buy. Then when you're leading up to an event or a news event or earnings, typically when it sees more volume and the stock starts to move a little more, the contracts will have more implied volatility pumped into them. Okay. And when you go and you increase implied volatility a ton, when you're in at a lower implied volatility, it doesn't even matter if the stock really moves in your way, it'll go higher. Okay. It'll increase in value. So if you guys don't understand that, they explain it really well. They just had the video that we posted earlier on it. Should be on the YouTube channel. I'm going to check with Dan after this to make sure it's up there. But you guys could check that out as well. They go over it very well. They probably go over in detail. I haven't even gotten to watch it yet. I'm going to watch it tonight. Oh, Brian's uploading now. Thank you, Brian. Shout out Brian, a producer of the YouTube channel. He is working on that on the back end. Thank you, Brian. Obviously, we're going to have this video too, so look out for that one, brother. I'll text you though. But yeah, guys, other than that, big week this week. So, hey, Do some homework. What I encourage all of you to do the homework before tonight. Okay. If you didn't do it while you were listening to me doing it, I'm going to bop you on the back of the head and say, get your shit together. I just gave you the game plan. Okay. But go back and listen to this again. Do the homework. Okay. And then Trell and I will record again tonight. We're going to post it before the morning. Okay. And then see if your levels match up. And if they don't, figure out why and ask questions. Okay. If they match up perfectly, then you're going to be good to go. Okay. That's literally Giorgino did literally send a message this whole week. He wrote out his thing by hand, posted it, and said, this shit did exactly what I said it was going to fucking do. And it did. All because he did the homework. Okay. So you guys got to know now. Now that we're at, okay, you made a good point here, Junior. He says, be patient for 421, guys. Yeah, I doubt we see 421 quickly. Why? Because everybody's thinking to go short now. So when everybody's thinking to go short now, and we're down here at support. Let me go back to SPY so you guys see what I'm looking at. And we're down here at support now, right? You guys see all of this over here. I would say from 415 to 421 to 420, 430. This is huge support. We have just banged off these levels and we're getting down there again. That's why I said the risk to reward level is going long at support right now, immediately. Now, I'm not saying we're going back to 460. I'm just saying if the trade set up for a risk to reward, that means the lowest risk with the highest reward is going to be on the long side. Okay. It's going to be on the long side. So be patient for 421. It probably doesn't go there. Matter of fact, we probably open up higher. Like the futures, we're down right now. Like we're down 7 points. I'll just go to it so you guys can see it. Like we're down 7 points. Okay. We're down 7 points. Now this is ES, guys. /ES on TOS is the S&P 500 future contract. So they trade pretty much almost 24 hours a day throughout the week. They start at 3 p.m. Pacific Standard Time on Sunday, and they end at 2 p.m. Pacific Standard Time on Friday. And the only time they don't trade is from Friday night until Sunday afternoon. And then they roll all day. So that's why I always talk. You guys see me give the 4-digit numbers. I was saying 4280, 4280, 4280 all week. That's because I know 4280 on ES is a huge, huge level. Right? So right now we're down 8. We probably open up positive, to be honest. We probably go back up a little bit. That's my guess. Okay. And from there going up, I would probably be looking to short pops on that. Now, if we crater overnight, like let's say we go down another 100 points overnight for some reason, I don't know. And we open up at that 421, I definitely be looking to go long off that then. Okay. But tonight, guys, what Trell and I are going to do, we're going to give like a weekly layout. We're going to give some if-then statements. If we get here, then this. If we get here, then this. So you guys should know exactly how we operate, exactly what we do. So if you're listening or if you're trading on your own, you can't be in the chat, then you know exactly what our mindset is too. Okay. With that being said, guys, any last minute questions, type them in. I'll answer them. I don't want to keep you all long. It's been an hour because we do have another video we're going to be getting out tonight to you guys. So we don't want to be taking all of your time. But if there are no questions, hit me with some thumbs up if you guys liked it or not. If you liked what I had to say, then that's cool with me. And if not, it's hard for me to believe that you would not like something someone's giving you for with great actionable info. But yeah, other than that, guys, appreciate y'all, man. It was fun. This was really fun. Some thumbs up, some thank you guys. Do the homework. All right. That's all I got to say. Do the homework and we'll see y'all bright as early in the morning. Okay. Have a good one, guys.